End of the cycle or super cycles? I gave a talk on a similar topic during Crypto's Fermi and Roswell, but now I'm serving up something new. Here's proof showing just how much the current cycle differs from the previous ones. Are you curious? Let's dive in. Hey, welcome to another episode of Crypto Market Analysis, where up until now we've been meeting every week to analyze Bitcoin, Ethereum, and a selected altcoin. We'd meet and take a look at the charts from three different perspectives: technical, on-chain, and FireCharts. All of this meant that the condensed analytical knowledge we served up here simply couldn't be found anywhere else online. You appreciate it. I can see the number of subs that came in just under the last episode. Thank you very much. So before we move on to the charts, just remember one more very important thing. The content in this material does not constitute investment advice. This is solely my subjective opinion about what I see on the cryptocurrency charts. For advice, consult a licensed advisor or simply do what I do, conduct your own research. If you acknowledge that, grab your coffee and let's get started with Bitcoin. If you watched yesterday's quarter hour with Kanga, Lukasz referenced my analysis there, in which I mentioned that Bitcoin is lighting up its 9th consecutive bullish candle on the indicator chart. D is sequential. Attention. 9th consecutive bullish candle on the indicator. It doesn't necessarily mean that this is the 9th candle in a row. Green, no, this is an indicator candle, so there may be red ones along the way. Nevertheless, they form a clear configuration. Let's focus on the TD itself. Sequential to start with. Here we have the 9th candle we talked about yesterday. Here we have the 9th bearish candle, and here we have another 9th bearish candle. They corresponded to turning points on the Bitcoin chart and triggered upward movements. On the other hand, here we had 9th bullish candles, which in turn led to subsequent declines. Here we had the 8th candle, and on the following day, this was October 7th, the 9th candle also appeared. It was negated, but the declines still followed afterward. So here, at the present moment, the situation is repeating itself. We have the 9th bullish candle, which moreover appears in a very important spot because it's basically just above the moving averages. The 100-day moving average is this yellow line, and the 50-day moving average, that's this red line. The breakout, as we can see, was very clear, but each time we observed a rejection. Already in yesterday's video, I mentioned that due to this configuration, Bitcoin has the potential to drop to $112,000. And as it turned out, during the day we saw a 1.7% bounce, and attention, a hit at 112. Even today, Bitcoin is bouncing exactly off $112,106, so this scenario has already played out. Does this mean we have to see deeper declines in this case? Not necessarily, because a correction can also take the form of consolidation. Besides, we can see a lot of support points underneath here. These lines here that are grayed out, one at 112, another at 110, 107,900, and 105,500. These are all our support levels, horizontal support levels, which means they are very strong levels. Anyway, in a moment, we'll move on to FireCharts and see whether there are actually buy orders at these levels. In any case, what could be in store for Bitcoin is possibly a consolidation below the moving averages or slight declines, at least in my opinion, down to around $110,000. Why exactly here? First of all, we had horizontal support here. Besides that, the 200-day moving average is heading here as well. That's our green line, which I'm pointing to now. In addition, we also have a certain peak here. That peak, which was set, for example, basically a week ago, where we can see that the price closed at around exactly 110,600. So this is a level from which, in the event of any turbulence, a rebound could really occur. There are a lot of factors here that point to this. What do the other indicators look like? Well, it's hard not to notice what's happening with the 350-day moving average, which we mentioned in the previous material, saying that it is the natural boundary between the bull zone and the bear zone, between a bull market and a bear market. And attention, here we have a very clear signal that this area is being defended. Bitcoin is moving away from the 350-day moving average and is trying to climb higher. Besides that, it's worth paying attention to the RSI, but before we do that, I'll remove this last moving average. Let's take a look at the RSI and see what's happening here. And we can see a very nice breakout above the 50 level and currently a retest of this level from above. So here we are dealing with support. Does this mean that during the day Bitcoin can't go lower? Attention, it can. Now let me explain once again. I've gone over this a few times, but I'll repeat it just in case. Once again, how does the RSI work? First and foremost, the RSI refers to the closing price of the trading session. What does this mean exactly? It means that even from the current price, which right now is about 112, 113, basically 200, If, for example, today there was a drop to the level of 110, the RSI would definitely be broken. But if on the same day there is a strong rebound and the candle closes at a similar level to what we see now, the RSI 50 will still be maintained. As a result, liquidity will be drawn in, while at the same time the bullish structure will be maintained. So from this perspective, it looks quite good and quite positive here. Nevertheless, it's worth paying attention to one more factor, and now to illustrate it, I will remove all the moving averages. Let's take a look at the structure of our chart. One could hypothetically assume that what we see here is an inverted head and shoulders pattern forming, meaning we have one shoulder here. Let me widen this a bit so we can see it better. We have the left shoulder, we have the head, and we have a potential right shoulder. And note, there are probably already reports online claiming that Bitcoin is forming such a pattern. I'm going to refute that right now. Why? Well, it would be nice to see at this moment that Bitcoin is forming a trend reversal pattern, which could result in a breakout, in this case, if this structure were legitimate, to the level, to the area, basically of the ATH. But we have to take volume into account, and here we can see very clearly that the volume is decreasing. In the case of this trend reversal pattern, at least a local one, we would like to see the volume increasing, which means, for example, that when forming the head, it should be higher than during the formation of the left shoulder. And it needs to be even higher when forming the right shoulder. That's not the case here. Besides that, since we're already talking about head and shoulders patterns, it's hard not to notice what's happening here. Here we have a potential left shoulder, here a right shoulder, here is the head, and here the right shoulder is starting to form. If this structure were to complete downward, well, it could also be evidence that we're dealing with a head and shoulders pattern, which in turn could signal a bear market. But hold on, I have to contradict that here as well. We don't have it. There is no indication that this is actually a legitimate pattern, because in this case, if we look at the long term and consider the volumes from this side, we see that they are increasing in a situation where we supposedly have a pattern that should indicate a trend reversal downward. However, those volumes should actually be decreasing. This is basically the opposite configuration of what we saw here, so I realize that it might be somewhat conflicting in its own way. If you want to fully understand what I mean here, play this material again, study the volumes carefully, and how exactly reversal patterns work, whether it's from an uptrend to a downtrend or from a downtrend to an uptrend, because these volumes are extremely crucial here. And online, you often come across information or analysts who completely misread head and shoulders patterns. So I encourage you to really expand your knowledge if you truly want to trade based on technical analysis. Let's also take a look at what happened on Bitcoin's weekly chart. I present this kind of weekly analysis every Monday on my Twitter as the first post, which is the closing of the previous week. And pay attention, because so far, everything here looks quite promising. We have a situation where Bitcoin is bouncing off the 200-day moving average, and this rebound is essentially confirmed here. We can see that the long-term momentum, as indicated by the RSI, is still downward. Now, I haven't drawn the line here, but we can notice, and I'll discuss it at this point, that here as well. Are these drawings downward when here the peaks on the RSI, on the price are rising, but at the same time we also observe a bullish divergence, not a classic RSI divergence, but still a momentum divergence, which is a local divergence where here the price is clearly rising, while here the RSI is falling, and note bouncing off the 50 level, which is the boundary between bulls and bears. A very important area. That's why, in my opinion, there is a high chance that Bitcoin will break out from this point. However, all these divergences should not be ignored, because currently Bitcoin is somewhat caught between a rock and a hard place, and an anvil where the price action is starting to tighten, where we have long-term downward RSI momentum and short-term upward momentum, so there will definitely be some pressure here. I absolutely won't be surprised if over the next few weeks we still see consolidation here before a specific move forms in a particular direction. So far, I still have a bullish outlook on Bitcoin, even though we're currently in October, which is potentially the month marking the end of this cycle. But at the same time, I can see through the indicators that something is changing here. This cycle is different, and of course, I intend to prove it through on-chain analysis. The first indicator I'll present in the on-chain analysis will concern how different the current picture of Bitcoin is from what we've observed so far. So let's move on to Bitcoin on FireCharts. Let me remind you once again what FireCharts are. It's a compilation of the largest order books from the biggest cryptocurrency exchanges in the world. And in front of us, we see a certain blue line that represents the price of Bitcoin, along with various horizontal lines. The larger they are, the greater the volumes. Higher volumes are found on these lines. Of course, the buy volumes are located below the current price. The sell volumes are located above the current price. And we can notice that currently Bitcoin has hit a certain resistance zone around 113, just under 500. Here we have 20 million in Bitcoin waiting to be dumped onto the market. Since yesterday, we also have this yellow line that has appeared, which indicates certain volumes that showed up around 116,400. And here we have $27.5 million in Bitcoin. Overall, we can notice that there are quite a lot of sell volumes from the current price upwards. Here, there are several million up to the level of the aforementioned 116.5. Then we also have several million spread out every few dozen dollars, all the way up to the level of $120,000, where the sell volumes exceed 32 million in Bitcoin. But what does the demand side look like? And here we can see that it is also increasing. First of all, until yesterday, we saw a kind of dark area below the current price, but since yesterday, more and more buy orders have been appearing. These orders have volumes of several $million in stablecoins, and they go down to the level of 105, where the first accumulation occurs. This accumulation consists of volumes on the order of $20 million in Bitcoin. Then lower, all the way down to 100. We have a very high concentration, and at 100, again, there are $31.5 million waiting to buy Bitcoin in case of any turbulence. I also mentioned a moment ago that there could be some consolidation here, a tightening of price action. And so far, FireCharts are showing exactly this pattern. Let's also take a look at the CVD, because on the CVD, we can see who is buying. Just yesterday, I reported on my Twitter that there is a lot of interest from many wallets. Brown wallets, in this case whales, are buying, and purple wallets are following them and also actively buying. Interestingly, red wallets have also started moving. Green ones woke up a bit yesterday but are cooling off today. However, retail investors, on the other hand, have lost interest. Retail investors, represented by our orange line, the smallest wallets holding between $100 and $1,000, had been on a downward trajectory for quite some time, at least until yesterday. But since yesterday, they've suddenly started moving upward again. So here, interest is returning once more. Ethereum, on the other hand, is in a situation that personally doesn't really suit me and doesn't encourage me to trade Ethereum. Why? First of all, let me go back once again to what I said earlier, that there is potential in the case of Ethereum, potential to break out toward the all-time high, but perhaps not exactly at this moment. Why? Because Ethereum is bouncing very clearly off resistance levels, and these are exactly the same resistances as in the case of Bitcoin, namely the 50-day moving average and the 100-day moving average. The bounce is very pronounced, and we can see that Ethereum is in a slight downward trajectory. It is currently testing the area around $4,000, and unfortunately has the potential to drop a bit lower. First of all, let's remember that since Ethereum is touching resistance levels, resistance is not a place where you buy, but rather a place where you sell, so these declines may still be justified here. And the first support level for Ethereum will be around $3,800, meaning those lows, those closed candles that we observed here. In addition, the wicks of those same candles already reach levels of $3,675 or lower. We can see this extended wick here down to around $3,500. That's why, in my opinion, these are good moments to play around with DCA and buy more. Of course, remember that this is not investment advice. This is just what I might do here, meaning buying at the lows. But at the current price, I'm still not interested in buying Ethereum. I would be much more willing to approach Ethereum in a situation where it breaks through the resistance levels, moves above the 50-day and 100-day moving averages, tests them from above, and then gains upward momentum. Why? Because then I would be in the position for a shorter time, and it could result in a quicker profit, even though, basically from the current price, if an upward move were to start here, my profit would definitely be smaller. But I still see potential for declines and for accumulating Ethereum, buying it from the market at an even lower price before the upward move, which could still happen at any time. Let's also remember the 200-day moving average, that is our green line, which is also currently heading toward that area, $3,500. So a possible drop to this level and a rebound precisely from this area. Not only with horizontal support, but also with the support of the moving average, such scenarios are justified. There is still one more factor here that concerns me. Above all, it's the RSI. The RSI, which at this moment is giving us, well, I don't see a divergence here, but actually there is a divergence. It's a bearish divergence. We can draw it out like this. Here we have the price, which is falling. Here we have the RSI, which is rising. Admittedly, this divergence is relatively easy to negate, but it's worth pointing it out. And besides that, it's also worth remembering that the RSI tried to reclaim the 50 level. And here, Ethereum, unfortunately, it wasn't able to do that. We see declines below. Yesterday's session on the RSI closed at 46.65, and this could further deepen at least this slight local downward trajectory, and also Ethereum on FireCharts. Of course, we always come back to this. We see a certain trading zone where Ethereum is currently located. We don't see any broad clusters of support or resistance except for the level we're showing here at this moment, 3,920. So these are the areas where Ethereum may still encounter demand. And who? Currently, the only ones interested in buying are the whales, represented by our brown line, which corresponds to wallets holding between $1 million and $10 million, waiting to buy Ethereum either during market turbulence or even at the current price. The other wallets showed some activity. Here we can see retail investors who were even on an upward trajectory today, but are now on a downward trajectory. The second largest wallets, the purple ones, as we can see here on this chart, are scraping the bottom. So at least for now, they are not interested in Ethereum. The altcoin chosen for today is Litecoin. Litecoin, which I don't recall ever analyzing on Kanga trends, unless it was a really long time ago. If that's the case, I honestly might not remember. Litecoin, which by the way is sending a lot of negative signals. Why? Well, let's take a look at what happened here. First of all, we've already talked about the TD, sequential. So the first thing that catches our eye is the 9th bullish candle on the indicator, a trend that wasn't particularly strong, and we see a strong rejection. Notice we're rejecting a lot of levels all at once. First, the horizontal support. Let's focus on that to start with. Around the $104 to $105 area, we have a rejection. The 50-day moving average, a perfect bounce, and just yesterday, a rejection. What's more, this move was strong enough to also reject the 200-day moving average, because if we zoom in, we can clearly see that the price closed below that area. Besides that, on the RSI as well, Litecoin touches the 50 level, bounces off it, and we don't really know where it's headed next. In this kind of setup, I would rather expect declines or possibly just wait for the moment when the RSI breaks above the 50 level at the current time. As I mentioned earlier, resistance levels are generally for selling, not buying. That's why I'm absolutely not interested in Litecoin, and I have to admit that in its current setup, it just looks bad. Here we might see a longer period of consolidation or even declines. That's why, at least for this altcoin, I prefer to keep my distance. Litecoin still has the FireCharts, and here a lot actually points toward consolidation. So maybe it won't be a deeper correction or bigger declines, but simply a consolidation. We see a lot of sell orders above the current price and also a lot of buy orders below the current price. However, it's clear that these buy walls are lower, so it seems that consolidation with a slight bearish sentiment is stronger here than the possibility of any sharp declines. Besides that, it's worth paying attention to what's happening on the CVD, and on the CVD there are purchases. That absolutely cannot be hidden. The purple line, which represents the second largest wallets, holding between $100,000 and $1 million, have been interested in Litecoin over the past few days. Now, over the last 24 hours, their trajectory has flattened out a bit. Let's say it's gently rising. It's not clear what exactly will happen with them. In any case, there was definitely some interest up until now. The remaining wallets, as we can see, are behaving in a very similar way, except for the retail investors. Once again, retail investors were interested in Litecoin up until 24 hours ago, but now they've completely withdrawn from the market. Let's quickly take a look at the Bitcoin spot ETF in the United States. Here we can see purchases that have been ongoing for 4 days and are really very slow and balanced. We don't see any sell-offs. For now, it all looks quite calm. So why is this cycle different from the previous ones? Well, this is shown to us, for example, by the chart we have in front of us on the screen. This is a chart showing how far Bitcoin currently is from its all-time high. These white areas beneath our nice colors here indicate just how long Bitcoin has been flirting, let's call it that for now, with its all-time high. As we can see, when we compare this area here, that is the current cycle, with previous cycles, it is a much longer period. This, in turn, indicates that Bitcoin is becoming much more similar to traditional financial markets, to the S&P 500, to the gold chart, which if we were to lay it out on a similar colorful chart illustrating this pattern, we would see that they operate in exactly the same way. Therefore, from this perspective, there is absolutely no doubt about it. This cycle is different from the others. Of course, this could also mean that at some point, Bitcoin will set its own all-time high. I will definitely keep coming back to the critical deviation indicators, and I will do this regularly, especially from the perspective of this. At what point in time we currently are on the Bitcoin chart? At this which may potentially tell us that the end of the cycle could be near, but at the same time, the indicators are not confirming this for us. There will definitely be a lot about these indicators. I will be talking about them on my Twitter, so I strongly encourage you to follow me there. And one more explanation. Why does this chart look the way it does? Well, for example, because Bitcoin often breaks out to around its ATH and then consolidates for a long time. Consolidation is exactly this kind of filtering around the ATH area. We are not dealing with what happened in previous cycles, that is, with deep corrections, we kept moving close by. ATH, the market getting bored, then we experience another breakout, another consolidation, and again the market gets bored. And in this way, these consolidations, which have the characteristics of a correction, basically extend the pattern we are currently observing. And this, in turn, may cause the current cycle to actually last longer than the previous ones. The second on-chain indicator we're looking at today is SOPR. SOPR, which has repeatedly indicated to us whether Bitcoin sold at the current price is being sold at a profit or at a loss. And above all, we can see on our 14-day interval, on the 14-day moving average, that the boundary between profit and loss has not been reached at all in recent weeks. We see rebounds from slightly higher levels, but overall, it's safe to say that these are very secure levels. We also see a breakout. This breakout, above all, this indicates that more dormant wallets, which have basically been inactive for years, are once again showing activity and are selling off their Bitcoins again. At, as we can see, quite high prices. But if we change our moving average to a 7-day one, we'll notice that a reset occurred right here. The indicator reached the level of 1 down here, and of course it also bounced back because what we observed on the 14-day moving average must also appear here, meaning this very breakout. This is evidence that weakened portfolios are selling off, but nevertheless it's important to remember that the reset has already occurred here, and historically this reset usually created some room for growth for Bitcoin, for its price, and that's why the indicator also broke out. That's why, in my opinion, the bull market, looking through the lens of what we see on this chart, can still continue. Let's take a quick look at what's happening with the Bitcoin balance on exchanges. We mention it very often, so we need to monitor it very closely now. We can see that in recent weeks there's been a downward trend, and this downward trend, despite the recent rebound, is still continuing. Here we can see a slight rounding off in the last few days, and perhaps this downward trajectory will continue. For now, however, compared to last week, we are staying in very similar areas. We'll see next week how exactly this will play out. Now, to sum up last week's contest, the winner for the previous episode is Tomasz Karbowski, who analyzed Bitcoin. Very nice comment, very interesting perspectives. Submit it. Tomasz, please contact support now to claim your prize. That's all for today. If you enjoyed it, and I believe you did, be sure to give a thumbs up and rate it. Please rate this episode. On a scale from 1 to 608, where 1 means it's just bad and 608 means fantastic. And if it's fantastic, see you next time. Bye.